Gentlemen, boys, welcome back to the channel, man. We got a little bit of different video today. Haven't made something really trading related in a while, so I'm pretty fucking excited. We got trade recaps today from last night's position and then yesterday's position as well. We had a 1 to 3 on both, so 6 fucking percent, bro, in 2 days. Let's go. And then I'm also pretty much gonna be like giving you guys some game on the proper way to really think and go about trading with percentages and the plan on literally how I plan to get to 6 figures a month, thinking about percentages and funding capital, which is probably one of the easiest ways to get there. Anyway, so boys, without further ado, let's get straight into it, man. Now, um, boys, I trade ICT concepts for the most part. Like maybe you guys have heard of institutional trading. Like there's so many different phrases, words, concept names that they've thrown around in the past couple of years. It's kind of funny when it's really all like the same shit. You're either really trading like trend lines or like the other way around, but it's simple supply and demand. And then with trading in specific, bro, when it comes to my strategy, I keep things very, very simple. Like I said, it's supply and demand, basic market structure, risk management, obviously dabbling into like liquidity, things along those lines. So I'm going to be doing like a very fast recap. And then as time goes on, I'll probably be doing like separate videos based on the details in everything. But for the most part, boys, what we had here and what I was really looking for market to do after doing like top down analysis is I was looking for market to pull back into this huge imbalance zone that we had. And if you guys are unfamiliar with top down analysis, you basically start at the top with the higher time frames and then you just make your way down. So you do your analysis on the daily, weekly. You can see we're clearly on a bearish trend, right? And then you mark out the this is why I have this drawn. You just mark out the trend. So clear bearish market, and then you do this so forth and so on. And so the more you do this, you can kind of see we had a point of interest here. The more we go down on like the 4 hour, we had another point of interest here with you can see the last down, the last up move before all of the down moves. That's like kind of what I consider a point of interest or consolidation. Like there's so many different things. But with that being said, once I did this and kind of saw this imbalance zone, I actually got really lucky on this position. And this was honestly not a good trade to take, but I ended up taking it. So let's get straight into like the specifics for the day, bro. So in short, gentlemen, what I was seeing is we had this huge up move right here that pretty much took out these highs over here and swept this liquidity. And I was like, oh, okay, perfect. Came back down perfectly into here. Honestly, this would have been like the more ideal place to take this position. But with market being on overall like downtrend, this is kind of like a weird thing anyway. So then as you see, I'm just marking out the basic structure, bro. We're probably gonna see market do this. Anyway, so as you guys see here, bro, if I zoom in, we had the huge move up, and this is on the hourly, mind you. So this was still looking bullish on the hourly, but keep in mind on the daily we're bearish, right? So boom, 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 boom. I go with this thing called first come, first serve, depending on how much momentum there is. So what that basically means is you guys can see here, we had boom, 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 boom. And then as soon as I seen, I think it was on the lower time frames. Yeah, as soon as I saw market really push up here, close above these highs, I was like, yeah, we're on go. We're pretty much going to either push past this or we're going to tap into this level and then continue to the downside, right? Because I had to be very aware of like we are on a bearish trending market. So with that being said, I still took this. Honestly, my profit targets normally would have been like all the way over here, bro, to really come back into the daily supply levels and fill this imbalance. But what I also took into account was like, bro, we are on a bearish market. This literally could just tap into here. It could just like break this high, take out some of this liquidity, and then completely fall. And that's exactly what happened. And that's why you never really even want to take positions that are going against the daily bias because they're so much more choppy. Like if you pay attention to this price action, you'll see, yes, we did have this big move up and then it's immediately back down. But then you can see how kind of like slower it was to the upside compared to the down moves. Like if you look at these down moves that are in line with the daily on the lower time frame, you had boom and then something and then boom again. And then you'll probably see another boom after this low, this liquidity on the low is taking out. And so just important to note, like it's always better to trade with the trend, bro. This was not a good position, but still a dub. This was like one of those where you're kind of breaking your trading rules, but you still caught a dub. And honestly, I got lucky, bro. My TP was right here, but on my broker, I still got taken out at my take profit. So I got really lucky. Uh, but I went to break even as soon as these highs were taken because I understood again that we're on a bearish market. But yeah, boys. So that was the first position. You can see we had like an 8 pip stop loss. It was pretty much like a 1 to 3. And then the next position, same shit. This one was actually really clean. GBP USD. You'll see, bro, top down analysis though. Y'all boy know this shit. If you look, where is this at? Boom, 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 boom. Really fucking simple, bro. Like it doesn't get simpler than this. And then if you kind of just mark out the zones as to where you're really looking for the market, bro, it's like it's really fucking simple. Like it really is this simple, you know? Boom, right? And you can just kind of see it off that. But like market taps into this level, then this level, and then this level, and you just take market to lows, bro. Trading becomes very, very fun and easy when you start to trade with the trend. And so that's what happened here. Again, I could kind of tell based off of the momentum that we had here that market was absolutely moving. And that's why I ultimately ended up taking this position right here as soon as this closed above here to the downside. Now, the reason I would usually target the lows, but the reason I didn't is because I felt like market had the probability of doing something like this, bro, where we see this right here and then it kind of comes into here and then potentially see a basically retest into this area before then going lower. So I just kept that in mind that market could potentially come back and like pull into these areas. Because if we go on like the 4 hour, you'll see how we have this area essentially like tap into. And it could just come back in here and boom. And so that's why I only target a 3 to 1 instead of the lows. And then we obviously had news as well. So that's why I was like, all right, bro, I'm just gonna target this shit. I don't want market to boom, 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 and then yeah, take me the fuck out. So I was like, all right, 1 to 3. And that pretty much it, bro. You guys can see it's very simple. Targeting liquidity, lower lows, imbalance zones, point of interest, market structure, keeping things very, very simple, looking for shifts in structure on every single time frame. Things are really, really simple, or maybe they are simple to me. Maybe they're a little complex. I'll get better with the explaining as things go on. But boys, that pretty much sums up the two positions. So now to pretty much finish off this video, what I want to speak about, bro, is percentages. Gentlemen, something you absolutely have to understand is trading is a percent game, bro, especially in your early days if you do not have a lot of capital or you're still developing the skill, man. Because I'll see so many people put in like $500 into their account, this, that, and they're really good traders. This is what happened to me for a long time as well. Like you'll be really good at trading. But the problem is you have like no risk management. You get so tied emotionally to like how much money you have in your account, how much you're risking, revenge trading, etc. And so the reason you want to focus on like percents, bro, and really just looking at trading in that sense is because, gentlemen, imagine you had $500 that you deposit into your own broker and you risk 1%. Okay. Now, 1% of 500 is $5, right? If you in a whole month only made 10% on your $500 deposit into your trading account, you would make 50 bucks, right? So at the end of the month, you have $550 in your trading account. You'd be like, what the fuck, right? Nobody can live off of $50 a month. For sure, you can't live off of that off of trading, right? But now I want you to think of this, bro. If you had $1 million in your own trading account and you made 10%, you just made $100,000 in a month. Can you live off $100,000 a month? Of course you can. You just had a 6-figure month, right? And what happens now is if you trade based off of your $500 account risking 1%, bro, you will actually see how much more emotionally intelligent you will be with your trading. because you've now kind of eliminated a lot off of your table, bro, when it comes to managing your emotions. Like if you're putting $500 into your account and you're over leveraging, you're risking like 50% of your account, you're risking 250 bucks or maybe even more because you want to do like an account flip. And that's totally different. It's not what I'm talking about. I'll touch on that at the end of this video. But when you're risking a very small percentage of your account, especially again in your early days where you're developing the skill, maybe you're perfecting whatever it is, your trading abilities to getting better. Like bro, you are going to be the most emotionally intelligent that way. Like imagine again if you had $1 million in your trading account and you only risked 1% of that. So what is 1% of a million? It's 10,000. So if you had a $1 million trading account, you only risk $10,000. Imagine right? Because now you know how much like buffer you have in that account. Like you can essentially lose 100 trades before blowing your entire account. I mean, not taking like spreads and commissions into account, but for the most part, you can like take 100 losing trades before blowing the entire account. It's like you have so much more of a buffer, right? If you only risk $5 on your $500 deposit, like you're gonna be more comfortable. It's as simple as that. You're gonna be more emotionally intelligent with that, and then that's when trading becomes super easy, bro. It's like the less you focus on actually making the money, the more money you will make, and you just focus on trading, having a simple edge, bro, and executing on that edge, executing on the strategy, only trading one, like taking one position a day, maybe two, very rare, only trading one session, right? So forth and so on. But I'll make another video on that. But for the most part, what I want to get at with this, guys, is if you have, okay, a $500 account right now, I want you to risk 1% for the next month and just see what you can do with that account. Don't worry about the money, bro. Literally just see how good you can become and risking $5 and see where that account ends at the end of the month. Now, maybe this is also something you do with like $100. Maybe you make $10 in a month. It's all the same. The money doesn't really matter. What you're really looking for here is just consistency, and you're looking for you being able to execute, right? Now, there's a bunch more to it because what happens is if you did the same thing with like $1 million, uh, you obviously are going to have to take into the account of like the emotions in seeing big numbers. Because when you don't have money, bro, and when you come to money or when you're playing with a lot of money, your emotions are going to slowly start to tie in and create this like connection because it's a lot of money. You're going to see big numbers. You're going to be like, oh shit, right? And closing trades too early, et cetera, right? So there's a lot that goes into it. But for the most part, like if you took a position on two proprietary trading firms funding accounts that you have, like say I had 500K with one funding and then I had 500K with E8, right? The both funding firms. So now I have $1 million in trading capital, and now imagine that I just trade risking 1% on both of those accounts, use a trade copier. I'm not worried about the money. I don't even look at the money. And I end up making like 5% this month on both of those. Bro, I just made $50,000 this month, right? The only hard thing is obviously to get to that point and managing your emotions when you start to see this money and understanding that it's real after you're able to pass, these challenges and phase one, phase two, get the actual capital. There's a lot more to it. But for the most part, all I want you to understand, bro, is that thinking as trading in percentages is the best way to go until you get to a certain point. Now, I just gave you the breakdown as to why. Now I want to give you the understanding of the opposite of that. So what happens, boys, is when you don't look at trading as like a percent game, you can also just look at it as a money game, which is completely valid, to be honest, right? Because at the end of the day, the only thing that really matters is like how much money did you make? Like that's literally the goal. That's the credibility. Like how much money do you fucking make, right? And so I always say the best thing possible really is to have your own trading capital because it's all realms of freedom there, bro. No restrictions, no dumb rules that the proprietary trading firms have. No restrictions on when you can withdraw. You can deposit, withdraw money whenever the fuck you want, right? So forth and so on. And so what you'll see, boys, is with your own money, typically you won't be risking like 1% of it. when it comes to like trading your own money, you do end up risking like 3%, 5%, 10%. Bro, even I've risked sometimes 20%, 25%, 50%, sometimes even the whole account. Because what you have to understand is if you deposited like $50,000, or take the example of me flipping like $100 to 10K, it's like as long as you're okay with that risk and you understand the risk, it is what it is, bro. It's free game, right? So if I deposit $100, I figured out you only really need to flip the account like 4 or 5 times to end up to 10K without taking a loss. Or no, I believe you can take one loss in between. But thinking about like this, okay, if I deposit $100 and I hit a 1 to 3, now I'm at $400. If I then hit a 1 to 3 with $400 on the table, now I'm at so it's 4, 8, 12, 1,200 plus the 400 in the account. Now I'm at $1,600, right? Then you take 1,600, so you take the whole account again and times that by 3. You're at 4,800 plus the 1,600 that's in there. You're at $6,400 in like 3 flips. Then from there, bro, all you really got to do is like you just got to make $3,600. So you can either risk $2,500, hit a 1 to 1, or like a 1.1, whatever. You can risk 2 grand, hit like a 1 to 2, and so forth and so on. But all I'm saying, boys, is when you do get to that level, it doesn't matter essentially with your risk because you understand the risk. Like if I put $50,000 into a trading account, I'm not really just going to risk 1%. At that point, depending on my confidence, depending on the setup, I might risk 5 grand on the trade. I might risk 10% because I'm going to make 15 grand minimum, 1 to 3, right? I might risk fucking 50% of the account. I might play $25,000 on this trade, and I'm gonna make 75,000. And that's when you get into like account flips, right? And you can see people making like $75,000 in a day, $50,000 in a day. Now, I'm not saying I would recommend that. I wouldn't. What I would recommend is you risk 1% and have a lot of funding capital. Go trade prop firms, and that's exactly what I'm doing. So my focus is just to get $1 million of funded capital this year and make 10% every single month. Not every single month, but like I'm not putting an expectation on like how much I want to make every single month because that's when you start to like kind of fuck up your trading. But that's kind of the vision, the goal is like, all right, $1 million in funding capital, make $100,000 a month from trading. And that's the best way to do it. Risk 1%, maybe even risk 2% on certain setups, make 10% on $1 million, you'll make $100,000, right? So, boys, hopefully that made sense in understanding the best way to really go about percents and risk and understanding risk management, right? If you have a $50,000 account and you're going to risk 10% of that account, understand that, okay, you only have a couple of tries before you blow this account. But if you're good, you're confident, you understand your setups, you have a great setup and you're willing to risk 10%, like you're going to make a fuck ton of money, right? You can't do that on prop firms, but prop firms, the way you approach prop firms and the way you approach like your personal trading account, I think are two different things. But in the beginning, definitely to learn the skill, to find the consistency, to be emotionally intelligent, be disciplined, stick to your strategy, bro. I promise you, you don't need to deposit $1,000. You don't need to deposit 10 grand. You don't need to deposit $200, bro. Like deposit $100 and risk $1 a trade just to see your consistency and completely remove like the fact that you want to make money from that, even though you have like the best way for me to explain that, and this is why I don't like people trading demo at all, literally only trade demo for like 2 weeks to get used to the buttons, is you're always going to be connected to money in some way, shape, or form. At every level, it's just going to be more money that you're connected to and like the bigger numbers, but you're always going to be connected at some point. And so it's like, shit, I forgot what I was saying. Oh, yes. It's like, even if you do deposit $100 and you're trading risking $1, you hit 1 to 3, you're going to be just seeing $3 essentially like win and fluctuate. And just because you're consistent now with that $100 account, that doesn't mean you're going to be consistent with like $100,000 funding account because now all of a sudden you've gone from seeing $1 fluctuate in your P&L to like $1,000 with your 100K funded account, right? And even though it's a buffer and like it's essentially the same risk percentage wise, you're still connected more to that money. You haven't gotten used to seeing like $1,000 floating and making $3,000. Like, oh shit, I'm up 2,500. Do I close this trade early? Do I wait for it to play out 3K? And that's when it comes to just trading and getting used to seeing the numbers and becoming like disconnected in a way, not really letting that get to you, letting the analysis play out, just following the plan. But all of these things coming together with time and practice is what's going to allow you to flourish, bro. So, boys, hopefully you took something valuable from this video, understanding percents, the trade recaps, keeping markets very, very fucking simple. If you want to join the trading Discord, it's going to be free. There's also a paid side to it where I am going live with my sessions every day, saying my setups, building discipline for my boys, and really developing their psychology is more so the side that I want to put emphasis on top of the trading. Because at the end of the day, bro, like that's what I've noticed for me. It's like it's always been the psychology, bro. It's never been the fucking concepts. The concepts are easy to master. You can master concepts within a couple months, maybe even less than that, depending on how serious you are. It's all you. It's you versus you. That's literally it when it comes to trading, from my understanding and the way I think about it, bro. So if you want to join that, link will be in the description. Connect with me on IG. I love you boys as always, and I'll see you gentlemen in the next fucking video. Let's get it, baby.